Hello, morning all. Okay, good to see you guys back again. All right, welcome back to Morning Kappa. Okay, if you look at the S&P 500, it rallied over 0.68% or 0.7% on Wednesday's session after the Fed cut interest rate by 25 basis points to range at 350% to 3.75%, which I think fulfilling those market hopes for a dovish year end, right? So I think this is well within what the market is expecting, right? And if you follow our Morning Kappa yesterday, I think Joseph showed that over 80% are expecting for the rate cut as well. Okay. The Fed share signal pivot to protecting jobs. I think that the rise in unemployment, which overshadowed a rare split decision among the policymakers as well. And I think the rally was broad based with the Goldilocks narrative cutting rates to support growth while inflation eases, right? Which also fueling gains in the industrial and the small caps alongside with the tech sector. So if you look at the charts here, the index reclaims higher and could potentially aiming for these 6950 points level. Right. So if you look at our US trading stocks that we have published yesterday, okay, we have Airbnb here. So the stock has breakout above the 123 resistance level, and you can now you can expect that the stock to travel towards the 130 dollar level on a strong momentum, followed by the next resistance at 138 dollar level. Now, if the counter reverse, do watch out for 118 dollar level for the immediate support, as it could indicate an initial trend reversal signal. Also, we have Micron Technology, MU. Looking at the charts now, well, the counter charted higher high market structure, well above the moving average, aiming for to reach higher towards this $270 level after it breached above the $250 level. Well, if the stock to climb higher, we could see that it might travel towards this 300 resistance level. Now, if the stock slide lower below 230, it might shift to a bearish structure. Okay. As for the China A50, well, it drifted lower on Wednesday's session as investors reacted to the mixed inflation data, while the CPI rose, the PPI remained in deep deflation, signaling that industrial demand is still weak. So I think the the the, the tech sentiment was hit hard. 10% crash in surgeon after the merger failed, right? So I think we dragged down by broader tech sector as well. So the market is now in firmly in wait and see approach, right? Holding a position ahead of the economic conference, which expected to start in anytime soon, which I think they will set the GDP target for the 2026. Okay, well, if you look at the WTI uh, crude oil futures, right? It was a bit uh, bullish, right? On yesterday's session, lifted. I think lifted by a weaker US dollar after the Fed cut interest rates by 25 basis point, like what I mentioned just now. which also boosted the demand expectation for 2026. So the bullish sentiment on yesterday's session was also supported by the EIA data showing that almost 2 million barrels or in crude inventory, signaling that refiners are still running strong, right? So, however, the rally was limited by demand warning, right? Gasoline inventory surged by almost 6 million barrels, suggesting that the fuel consumption the pump remains weak at this juncture. So, we still keep our short position unchanged, eyeing for the retest at $57 level, followed by $55 level. Well, the stop loss remains kept at $65 level. Well, coming back to our local market, yesterday the KLCI trended lower as investors adopted again wait and see approach ahead of um, yesterday's the US rate cut meeting, right? Also, selling pressure was concentrated in the tech industrial sector as well, tracking the regional weakness, but losses were cushioned by some defensive buying in consumer names like Nestle, right? Surging to provide the index support. So I think market breadth was still also negative as traders avoided big bets, referring to wait for clarity yesterday on the Fed rate cut. Also, yeah, if you can see here, in terms of the performance for the sector over the 1 week period, gauging on the value, right? I think sector that are gaining traction, can see here, such as industrial, manufacturing, right? Tech as well, and consumer as a whole. So now, looking at the FKLI, the index, however, trended upwards, rebounding from the immediate support, reflecting neutral to positive sentiment, right? So we still keep our positive trading bias unchanged at this juncture, and see if this 1,006 support able to hold, and the index rebound higher to the resistance of 1650 points level, right? Right, so in terms of day-to-day change for the secondary performance, that was the top gainer, adding over 1%, 1.19% yesterday. So this is our watch list. We have updated some names, and we included some names that we think that might have a good potential. Okay, you can take a look at NE cheating as well. Right. So moving on to our Malaysia trading stocks, we have UWC today. So the stock have breakout above this 4 ringgit level. Once again, on a strong volume. So with that, we expect that the momentum to remain bullish and the stock able to climb further to next resistance of 4 ringgit and 20 cent, followed by 4 ringgit and 40 cent level. And if the stock to clear below 3 ringgit and 80 cent support, this could shift to a bearish structure. Also, next we have Tong, right? Tiguan. So the stock is experiencing a breakout as well at 1 ringgit and 27 1 ringgit and 1 ringgit and 27 cent level. So if the stock remain bullish, we're expecting that the price to reach 1 ringgit and 35 cent level in the coming session with high volume as well. Second resistance is remain strong at 1 ringgit and 40 cent. Well, do watch out for 1 ringgit and 20 cent level for any attempt of reversal for now. Right. So just to follow up on this cheating, right? So well, it really caught my attention, and I think worth sharing with you guys as well. So as I mentioned on the previous session, and I think together with our report as well. So before this, we are waiting for the first resistance to be broken, which is at 82.5 cent. Now you see that here in the charts here, right? It is clearly above the level that we wanted. So together with that, I think it is also now trending higher above this 21-day moving average or SMA line, signaling that the near-term trend is now bullish. So if the positive momentum to follow through in the coming session, or even maybe tomorrow, I think we could see that it climb higher to create a new higher high, and to reach the second or even the third resistance level, right? Also, lastly, for the FCPO, well, the price plunged sharply yesterday after the data from MPOB revealed a massive surge in stockpiles, right? I think to the highest level, right? So, well, the sell-off was fueled by the shocking collapse in export as well, which completely overshadowed the drop in production, confirming that the demand has depleted faster than the supply. Um, yeah, I think with inventories now at year high and the rival oil prices weakening in some of the market, well, the market has lost its primary support, leaving prices to further downside. Also, yesterday, in yesterday's session, FCPO moved lower and breached below our previous support of 4080, and hence, we revise our support to 4,000 support level, together with 3,900 level. Also, for resistance, we lower our resistance down to 4,180, followed by 4,250, according to the support as well. Right, so that's all I have for today. I'll stop here and pass the floor to the next presenter. Thanks, everyone, and happy trading.
All right. Good morning, everyone. So today we have a a results review on Gamuda's first quarter 2026, which saw a core net profit of 207 million ringgit, which is 4% year-on-year higher. And although it met only 16 and 15% of hours and streets full year projections, we deem it to be in line, as we think that the upcoming quarters would see further contributions coming from projects, particularly domestic ones such as the Penang LRT and the Upper Padas hydroelectric project in Sabah. In terms of the construction arm in first quarter 2026, it saw a 10% year-on-year PAT increase, and margins were also stronger at 5.6% compared to 4.1% a year ago, given the higher domestic mix of earnings at about 61% compared to 49% a year ago. The property side saw a slight dip in terms of PAT in light of the absence of lumpy earnings coming from a project from the UK, which was present last year but no longer present this year. Moving forward, we think that its order book target of 40 to 45 billion ringgit by end of calendar year 2025 to be very well intact, as looking at how the order book is at the moment, it's at 37 billion ringgit, and it is likely to win roughly around between 5 to 7 billion ringgit by end of this year, potentially from certain key projects that they have been selected as the preferred contractor or via early contractor involvement works, such as the Marinus Link and the Sydney Metro West station packages, which which are among the few of the projects. Moving forward for calendar year 2026, also we think that Gamuda should continue to stand a chance to secure more projects, given that it has about 30 billion ringgit worth of active tenders coming from Australia, 10 billion ringgit from Malaysia, and another 10 billion ringgit coming from a combination of Singapore and Taiwan. So, given that we deem results to be within expectations, we make no changes to our earnings estimates, maintained by with an unchanged target price of 7 ringgit. We continue to like Gamuda given its diverse geographical locations, which could, uh, help to spread the concentration risk amongst the geographies. So that's it for me. I'll pass on the floor to the next speaker.
Hi, morning everyone. I will be presenting on a Plantation sector update on the monthly stats. So just a quick one, November output slipped 5% month-on-month, and this brings year-to-date November output growth to plus 3.4% year-on-year. So moving forward, we are expecting production to continue moderating following the peak output in October, and as we head towards the low output season in the first half of next year. So exports, meanwhile, were down 28% month-on-month, and this was largely expected given that demand has normalized post-festive season. However, moving forward, despite the attractive CPO prices, which are now trading at $138 per ton discount to soybean oil, versus $61 per ton discount to in October. I think exports might not see such a notable pickup or even stay flattish for the next few months, because we believe that the stock levels at importing countries are in no dire need of restocking. Pretty much India, Pakistan, and Bangladesh stock levels are now above average, and China is just at a -1% below average. So these countries, I don't think that they are going to be restocking heavily anytime soon, despite the competitive CPO pricing. So as such, inventory levels now rose to 6-year high to 2.84 million tons. And moving forward, even though production will moderate, but I think it will be offset by the lower exports, and as such, stock levels will continue to maintain above the 2 million ton mark at least for the next couple months. Yep, that's all for me. Thank you everyone, and I'll pass on to the next speaker.
Thank you, Iftaar. Hi, morning everyone. This is Vanessa from RHB Warrants. So just do a quick highlights on some of the very active warrants yesterday. Okay, so yesterday we actually have seen. Can you see my face? Okay, so yesterday we have actually seen a few. I mean, these four are top traded warrants yesterday. It's very active. All right, so we have the name of Suncon, Summit Construction Berhad C52, ABMB C26, Alliance Bank Berhad, SNS CJ, and also VSC1F. All right, so for all of these warrants, right, they have an expiry date of after 2036 because it's already December. Okay, so I would say if for those who are still bullish on some of these names and would like to have some leverage exposure on this, then you can actually explore on some of the warrants that's heavily traded. Sometimes it's actually quite interesting. Okay, so in the maybe I'll just pick VSC1F. So VS Industry is a call warrant. So if you compare on the underlying bid, which means the share price to the exercise price is still slightly out of the money, which means that the share price is lesser than the exercise price. Oh, and the expiry date will be on 26 May 2026. All right. So with this the effective gearing is giving all of us at about 3.3 times. So if you do a very easy multiplication, then it will be like 1% move in VS Industry, mother share, and then you will get an approximate 3.3 times, which means 3.3% gain in VSC1M. So that is how effective gearing works. All right. So and then when you look at sensitivity, which means that the how fast does the warrant move. Okay. So this is how I actually normally share with all of you. You have to first identify a breakout price and or maybe a momentum in the underlying shares, not from the warrants, because sometimes warrants volume is very high, but then actually when you look at the mother share, it's not very high. So the first thing you need to see is that the breakout price and momentum in the mother share, right? And then only you use the RHB warrant website to look for a warrant with good sensitivity and also high effective gearing, and most importantly, does not expire very very soon, so you have more time to trade, buy and sell. Okay, and then last but not least, use the price metrics. So this is the price metrics example that I have chosen a few. All right, so for example, PCAM C2A, 99 speed mark C23. So 99 speed mark C23 also we have seen quite some volume traded the days before. Okay, so with this, if you look at 99 speed mark C23, the sensitivity is at 2.4 ticks. So when you look at the color change in these metrics, then you know how fast does the warrant move. So 2 ticks or 3 ticks in the underlying share, 99 speed mark, and then your warrant will move by 1 tick. So in terms of percentage gain, because it's cheaper, right, for warrants. So 1 bit or maybe 0.5% move in warrants will actually give you a better percentage gain. But bear in mind, because it's a double-edged sword, so if it drops, then you also experience some bigger losses, right? And then if we are still also bullish on Gamuda, as shared by Adam just now. All right, so Gamuda C3T is compared. I actually did a few comparison on Gamuda warrants. Let me just share on the metrics. Okay, so this is metrics. Then I have a few. So I just put Gamuda, Gamuda C3T, Gamuda C3M. So this is how I compare my warrants. If I'm bullish on Gamuda and I have an aligned view of the TP of about like 7 ringgit. Right, Gamuda C3M, C3T, and C4A. How do I actually look at it? First thing first, if I am a short-term or medium-term investor, I want to hold for a few days or maybe just a week only, and then I don't actually expect Gamuda to move swiftly or maybe in a very big movement, then I will go for C3M or C3T, either one. Okay, but in this case, when the sensitivity is about the same, this is 4 ticks and 5.6 ticks, and I have a little bit more patience, but I want to make more money, then I will look for C3T, because C3T is giving you if you're buying at 7 or 7.5 cents, then 1 tick movement will give you a good percentage gain. Well, for this one, even though it moves faster, then you will actually notice the percentage gain is lesser, because the cost will be like 9.5 cents or 10 cents. All right, so it depends on the market price. Okay, when we are trading, and then you can use that market price, the share price, to actually identify what is the price for the warrant. So for Gamuda C4A, it's not that it's not good. If you look at the price, it's really cheap. Absolute price is really cheap. It's about 3 cents and 3 cents and a half. So if you are, and then the expiry date will be in 26 March. Okay, so this is suitable for long-term investor. So if you want to buy at home, and then you think that, you have a view that in 1 month or 2 months time, that Gamuda will go up above like 5 ringgit and 50 cents, then this will be a good one for you to hold. You can actually buy it at a cheaper price, like 3.5 cents, for example. But then you have to be bersabar for longer time lah, because the sensitivity is actually quite thick, and then you have to wait for it to flip a few more times, then only you will make money in Gamuda C4A. All right, but if you have time and you have a bullish view, and once it moves, imagine 0.5% gain in a 3 cent warrants. It's going to give you a very good return in this case. All right, so this is how we actually use a live price metrics to compare all of these core warrants. Not only Gamuda, but if you have Suncon, Sunway, and you want to compare, you can compare it using the price metrics. Okay, so that's all from me and from all of us today. Thank you so much for dialing in. We hope you a very happy trading day, and we'll see you tomorrow at the same time, RHB Morning Cup at 8. Thank you.